Okay, quick look through Monday's end of day closing screens. Shared this one public tonight. I'm just going to quickly have a look how many we've got on the closing highs tonight and write it down. 70. Just write that down on my board. So, pop in the US here, isn't there, today? A lot of volume came in actually there, didn't it? A lot of volume. A little bit of a blow off stick there and accumulation. So I'm just going to fly through my screens. Usually when I share these public, I do an awful lot of sort of methodology and the like. I'm just going to rein that in a bit tonight, and I think what I'll do is I'll just talk about a couple of the setups from last night's end of day screens, and I'll do that first. Quickly have a look at the markets, and then I'll just run through the screens for tonight and see what we see for tonight. So it's been a pretty good period for, well, it depends what you're in, I suppose, but it's been a pretty good period for the sort of gold stocks, especially the trend trades. Pretty good period in the portfolio. If you're in anything sort of large cap, I reckon it's a pretty good period for the pension as well. Though, I will say, you know, it's been a volatile one. So, I'm just going to fly through these markets quickly. You know, transport's here, just in the middle of the range. It hasn't even made it up into this band of supply yet. Still in a downtrend. Dow, it just bumped through that sort of bumped up into this area of supply, and it's just pulling back in here. Looks like a first retrace to this little level. From this little level we drew in there. You can already see my sort of view on the S&P. Time or price, you know, I've been banging on the drum for how long now. If we go back to new highs, you know, I expect a correction to follow at some point. If we correct here and coil up, well, that would be good. You know, if we went all the way down here, that would be a little bit more destructive, wouldn't it? If we did a deep retrace and still held the lows, you know, that's the bull case, isn't it? You know, the orderly sideways at some point, you know, normal correction sideways rather than, you know, another move. Well, a move taking the lows out is the worst, isn't it? You know, that means we're still in a downtrend. You know, these markets are in a twitchy area where, you know, if you're looking at a 10-month or a 200-day, they're twitching up and down a bit, you know. Is it an uptrend? Is it in a downtrend? Are we rolling over? You know, we are in that sort of area. As you can see, you know, my view on the Nasdaq, at some point will correct if it's a nice orderly correction, just down into sort of a normal area. Happy days. You know, this area here would be fair play as well, wouldn't it? Into that gap area. But that would be very normal, and that would be extremely good action, I would say. You know, consolidating, and what you want to watch when the market does sort of, you know, the bears really have a go. You want to see how the leading stocks are acting. You know, you always get a couple of days what we call a lockstep day, where everything pukes on the same day. You know, but you want to see if the new leadership rotation. You just want to see how those stocks, what are structurally the best stocks. You know, we're not going deep sea fishing here, looking for the worst. You know, the worst fallers. We're looking for the best action. What's, you know, basically a coiled spring ready to explode higher is probably what the best way of explaining it. Into the Russell here, yeah, just punch through that level into this sort of band of supply here. That's where it starts, and a bit of a psychological level there, and it's just bumped its head on the fall in 10-month or 200-day, and it's kind of flagging out, isn't it? We'll see, you know, time will tell. But we get to Europe, and you know the DAX is in a normal pullback area here. The FTSE 100 is kind of approaching a normal pullback area. 250 very strong, you know, at the moment. If it just had a couple of bad days and came down to it, you know, it wouldn't surprise me. But you know, it would still be a very nice slingshot area, I suppose is the best way of putting it. Small caps as well. I mean, look at fully listed small caps just went and took the highs out there, 52-week highs, and the aim. You know what I've just talked about. Same again. Markets consolidate through time or price. Time is more orderly. Price is faster. So just a quick look at gold. Yeah, happy days. It's basically channeled out a bit here, and it's probably in a bigger base. Time will tell with that. Oil's it actually, you know, oil dropped through this level. It hit sort of target 1 for us on the downside, and target 2 is a bit lower, but it's, you know, this area here is still what we call the voodoo average. It's still just a throwback at the moment, and you know, for oil to be more bullish, it's got to do a reversal, which would be a high low, high high in my world. In the simple Dow theory world, active high, lower low. It's in a downtrend, you know, reverse that. So, and again, you know, it would be better for everyone gets an injection of cash when oil goes lower, don't they? So in the long run, it will be a lot better. Let's just jump straight into, we'll just go and look at Bitcoin as well. You know, we've channeling action back to highs. You know, fantastic reason just to totally ignore everyone's opinions, isn't it? And just look at price action, because everyone's beating the drums on how bearish Bitcoin was when it was just coming back into a rising 200-day or 10-month. You know, if you want to buy something in an uptrend and you like to buy a pullback, well, you know, a pullback to a rising 10-month or 200-day, it's a pretty good area, isn't it? You know, so yeah, our view is this is a bigger base. If it coiled up here, that would be better for higher prices, wouldn't it? More efficient than it's been in the past, though. It's an efficient trading product these days. Still volatile, but you know. Quick look at TLT. We're still down on the lows on this. And then I think I'll just jump into 2 setups from last night. And when I go through my screens, real basic stuff, we see everything. We don't miss anything in the markets. If it's rising, it's got to trade these screens. It's going to trade a rising, you know, a 6-month closing high. Then it's got to trade a 52-week closing high. It will trade it multiple times on its journey, many times on its journey. A good outlier stock will probably trade it, you know, 3 dozen, 4 dozen times. But the you know, to ride a trend, you don't go looking for big trends. You go looking for big signals. So, you know, a big signal is a breakout out of a base. I mean, you know, you could say Jase above this potential stage 1 base. You know, if it's going higher, it's got to trade that level. This is real basic stuff. So that's one way I go through the screens every night. Just look for the new breakouts, you know, early. We're not interested in ones what we've seen a dozen times before, because we're already riding them, or we've chosen not to ride them. You know, we're here to ride the trend, not, you know, you can't backdate that. You've got to put your money to work and make a decision what you want to ride. So, you know, whatever your fundamentals are, you know, is fundamentals alone aren't a reason to buy a stock. You know, if the fundamentals are basically going to be proven right, you think a stock should go higher? Well, it's going to go higher. The stock's going to trade these first levels. You know, on the journey, it's got to take its first step onto the, you know, basically it's got to trade the first step, hasn't it? So that's the breakout screens, and then I also run pullback screens. So we found 2 stocks on the pullback screens last night, and a stock what has taken that first step on the journey had to trade there if it was going higher at this potential stage 1 base. It made a trending run and it did a pullback. So that's why this was one we looked at on Friday. And we did our little calculation, or I did my calculation, and it's told me that I've got to buy this on the open at 284.13. And you know, that was somewhere around there. It actually, you know, it opened, the spread tightened, and it gave a lot better price than that. And then volume came in, and it had a bit of news behind it as well. But volume came in. It's amazing how the news followed the signal for us, you know. So, you know, that's day 1. We'll see how it goes. Could be a winner, could be a loser, could be a scratch trade. We don't know. You know, we have to risk money in the market, you know, to make money. And as I keep banging the drum on, it's not about how right you are. If you're trying to play that I want to be right more than 50% of the time, you're probably going to be spinning your wheels and stuck in the, you know, looking for holy grail entry setups. You're probably trying to look for some kind of magic fundamental combination, or a combination of both, to get that high win rate. You're never going to get it, you know, you're never going to get it, but some people will be on that trend, you know, that treadmill for the rest of their investing sort of lifetime, you know, career, stuck on that sort of trying to be right. Doesn't matter. It's about the reward to risk of this position here was over 7 to 1. So you know, basically, if you were right once, that's, you know, you only have to be right about 30% of the time, or, you know, to sort of make money on a reward to risk ratio like that. You know, 7 to 1, you do the math. Super easy. It's about how right you are when you are right, you know. And it doesn't matter whether you're an investor or a trader or a swing trader, trend follower, it really doesn't matter. The end result will be how big your winners are, not how right you are. You know, the gain to pain of all the trades you take basically going forward. So it's one thing you'll never hear me saying, you know, this is a magic setup. What will give you 70% win rate, you know, because that's snake oil salesman, isn't it? It's not about that. So that was one from last night. I'll just go on to the next one. NG, get on my soapbox again. You know, it's pretty defensive stock, really, isn't it? But it traded, you know, it came out of this sort of bottoming base in action. Got a first retrace here, and then this is what we call a cheat. We've got a base, potential base, you know. This gap down's just on the ex-dividend, and I got knocked out of this one over here because I was late to it. You know, I should have taken this trade actually on this day here or this day here, and I actually took it a day late. Don't ask me why. We'll stand on the naughty step for a while. But sometimes they work. You know, you can take them. You know, you can take them as they're moving up. You know, we got this swing kicker here, and I basically took the swing kicker, but with a tighter stop. With a looser stop, I would have still been in it. Anyway, I took the trade again this morning. The reward to risk on this thing was 5.7. The entry was 10.4767. 1047.67, and the entry what went through was way below that. It's literally an 8-to-1 reward to risk. And as if by magic, both of these trades, these entries, they were the best we could find. And you know, there's a reason they did well today, you know, because they were kind of obvious to the whole market. If you buy pullbacks, I'm pretty sure you would have had a look at these two stocks last night. So that's, you know, they've set off well. Could be a winner, could be a loser, doesn't matter. I'll just keep stepping up to the screens and rotating this edge. I'll just keep stepping up, and you know, the aim of the game is to get the portfolio trending. Now, I'm not going to get lost in swing trade or trend trade or position trade. You know, where's your target? You know, that stuff we all cover. And I've got spreadsheets what work it out for people in my site. Just wanted to just do a little follow-up on them. We've been doing a bit of a swing trading sort of clinic, haven't we? Or pullback entry clinic as well over the last couple of weeks. So that, you know, those are today's, you know, we planned them last night, found them in the end of day screening, what I'm about to run. As soon as the screening ended, well, I did it this morning actually. I loaded up my my entry calculation and put it in my sort of position sizing spreadsheet, and it told me reward to risk, entry, all these things we love, and yeah, it just put the orders in the market and off we go. So with that in mind, you know, pullback entries or breakout entries, I'm just going to jump straight into my screens today. I'm going to quickly have a look what gapped up this morning. We always go through the screens to see the pro gaps. What's a pro gap? You can go to the ShareScope articles, and I did an article on pro gaps. So I'm just going to fly through these, quick look at those, and then I'm going to go into the closing highs. Real simple, only takes me a couple of minutes to do this every day. I'm not going to look at anything we've already looked at before on a day 2 or a day 3 or a day 4. I'm looking for day 1 breakouts. If I found one every day, it would be way too many, wouldn't it? But they are like buses. One second, let me just juggle some screens here. Cheers, James, Sound of Vision. Should have looked at that earlier because I've talked for 10 minutes before and been on mute. So I'm just going to fly through these. Obviously, you know, the metal stocks are, I mean, MTL, skin in the game on MTL. I'll just go back to basics. You know, if you're a position trader, if you're a swing trader, you're not going to be looking at a stock like MTL because it's too choppy and trades too choppy and thin. But if you get out of the noise and you're a position trader, it's a weekly chart, And you know, from the beginning of the trend, they're going to be really choppy and gappy, and as the trend matures and they become more liquid on the journey, all of a sudden, you know, you start to see price action on an intraday chart rather than just, you know, big gaps up and that. So they become more efficient as they move on the journey. This is a long way away from being efficient, but yeah, keep it really simple. If you're a position trader, you will be positioned in this one a long time ago. You know, the cleanest breakout area was from this one here, and it's up 350% plus from that area. The first pullback was this one here. You got a base retest here. First pullback to mean trend here. Off on its journey, it based out again, it broke out again. Another fair play area to get involved. It dipped back in after that and just went sideways for some time. Then it built what we call a base with supply, or, you know, a little bit of a bigger level up here. So, and we also got a low cheater, you know, what I call a swing kicker. Active low, higher high in the right side of the base. I think I tweeted this one out as well, because this was a really clean little entry here. This little area here, anywhere in this zone here. And it still dipped back into that area and through a swing point. But anywhere around here was, you know, fair game to capture this last move, which is up 80% out of that area now. So, yeah, I mean, this is one what's working extremely well. You know, guess what? That's the job. That's what we always do. You know, the job is to hold on to your winners, to ride your winners. Now, every penny this stock trades, less than a penny, in fact, is 1R. So every tick up by 1p or tick down by 1p, it's 1R in the portfolio. And you know, that's quite big. You know, your winners will start to dominate the P&L. That's what you want. You know, that means you're doing everything right. The worst thing you can have in, you know, and by adding to winners, you know, you get total domination of, you know, the things that are working dictate you know, your unrealized P&L in the profit. You know, the worst thing you can do is the opposite of that, isn't it? Adding to a loser. Then your portfolio is dominated by a losing position. A losing position gets heavier in the portfolio. So every twitch of that losing position, you know, imagine the opposite scenario of you know, a 1p move in this stock and it was down. You know, that's the I can't sleep at night sort of equation, isn't it? So yeah, fear of letting winners be winners is something you've got to overcome. Let's just move on. I said I'd just fly through and not go off piece tonight, but I can't help it, can I? We just keep drumming this stuff home every night. Higher high in ALK. Loss making by the looks of it. I've got nothing on it. Moving on. Swiftly moving on. Yeah, PAF is just pinned up near highs as well. Kind of looks prime, doesn't it? Famous last words. A bit of news on that AOM as well, wasn't there? Let's just fly through these last ones. And then we'll go into the pullbacks and see if there's anything swingable. And then I'll have a look at my screener as well. See what's in there. I'll just finish my coffee while this loads up. So, I'm just looking at the swing points here. Iofina, yeah, it's a super choppy trading stock, this one. I see the swing point, you know, base retest swing point. Earnings per share ticking back up like a lower high in the numbers, 3.4 down to 1.5, up to 2.6 in the forward. Pre-tax, 8.3 down to posted 4.8, and a tick back up to 7.4. So it's kind of a lower high in the numbers again, and 50 to 54 to 63 looks like acceleration in the turnover. Not exactly filtering through to the numbers very well. It is, but so just bring this over, you can see that for yourself. Choppy trading stock though, this one, choppy. Not for me. Let's just fly through these. This REE, another loss making. Rare earths. Yeah, we see the breakout, you know, a little zone of interest here. I'll be honest, if it just built, you know, a nice little wedge here, I mean, this is purely sort of hopes and dreams. You know, it's loss making, it's a hole in the ground, or you know, we call it a CTP, calculated total punt. It would be a little bit better if it coiled up here, tight range, and then broke higher. For those who like to take that kind of thing, you know, not a growth stock, is it? It's a loss-making stock. IG Group. Swing point sort of close to mean trend. It's done a huge move off the lows here. You know, this thing, you know, I'd rather be seeing something what was a little bit more coiled up before it broke out, you know. I'm not a fan of the financials myself either. GMET, yeah, again, you know, another loss-making one. We've kind of, I always, same stuff, you know, you got your breakout, you've got your first pullback, base retest, first pullback area, you know, in here, and high. Why do I call that a higher high and this a breakout? Because this is a base. This isn't a base. This is just a pullback after a breakout move and a higher high. So, though that's a very constructive, you know, all the way in a good trend, all the way up, you will get higher highs. You know, the spring, that you get more coiled spring from a base is what I'm trying to say. You know, this is where the trend is kind of starting, and I say that. I just have to zoom this out for you because this one's been going for some time, hasn't it? So we got this IPO breakout on this one, and you know where you're wrong on an IPO? Well, it's obviously here. So 52-week lows there as well, obviously. Shouldn't trade that level. And it breaks out, it dips back in, and it goes all the way on this journey. High. Bases out, high. Pulls back in, bases out. Breakout there. Pulls back in, base retest, first retest, whatever. High. Keep it simple. And just for those who are sort of new to this stuff, if you can't see it on a weekly chart, does it really exist? Always ask yourself that question. You know, I can tell that I could see it on a weekly chart, but sometimes people are a little bit too close to the noise and they're looking at little secondary price action and kind of inventing stage bases. So if you can't see it on a weekly, it's probably not a stage base. It'd be more of a secondary kind of base. HOC. So I'm not sure what this gap is here. You'd have to go and have a look. Suspension process. Right. Okay. A new one on me here. IPO. It's a little bit young for me to look at it. So that's that, and I'm just quickly going to look into my end of day screener and just see what that brought up. IAFINA and PAF. Let me just go into those. IOF, obviously this is a super choppy stock. When you trade something like this, you've got to go, well, I'm getting in this stock hoping it's going to trend off into the distance to soak up all the choppiness. You've got to go for a bigger position move, and as you know, it's quite neat. Sometimes stocks change the way they trade and start trading with really nice price action, and usually it's due to some kind of sea change in the numbers. There's been something in the fundamentals what really has it changed for this stock now. So I just expect it to trade like that into the future. And PAF, obviously, we're connected to the gold price, and just basically basing out, isn't it, up here? So yeah, that's what I've got tonight. It's like buses, but nothing in there what I would say is actionable for tomorrow for my style. But we turn up every day and we do the same thing every day. This is available to watch on catch up as well. Anyone in chat wants to look at anything, just give me a shout out quickly. Yeah, if you want to sort of visit trading bases, have a look at the articles, what sort of back up what I've just talked about tonight. There's on the first page, there's a bunch of links to a bunch of articles in there. And if you want to come and try a month with us, you know where to go. Let's quickly my view on the market is we're going to see the bears have a go at some point, but it's hard not to be bullish, and I was uber bullish before that correction, and the correction was quite a volatile one, but still, first correction in the bull leg of the US markets, and in the UK and Europe we never really got a bull leg, did we? We just got a move off the lows. So for us, it's like that a bull market hasn't started yet. Doesn't matter if the FTSE's bumped into all-time highs. We haven't had a new market leg yet. Go and have a look at small caps. Go and have a look at AIM, and we haven't missed anything. This is where AIM is. It's the last time it traded a 52-week high was all the way back here. We bumped into it here, didn't we? But it was on a down, opened up and closed down. The last time we traded up through one was all the way back in 2021. and that's 4 years ago. It's a long time ago. So some coiling action, positive action under 52-week highs here, and all markets agreeing. Well, you know, sentiment can't get much worse. I haven't seen sort of retail sentiment. I haven't seen so little interaction since I've been on the social media, to be honest. And so it's hard not to be bullish. Famous last words. Okay, I will leave it there. Cheers all.